What's going on? Quick update for everyone.
Inflation data still top of mind. Trade war, tariffs making inflation. As a quick reminder, a couple weeks ago, we last talked about this. We saw that the CPI numbers were starting to increase again. And in fact, for the past 6 months or so, had been increasing after declining for, about 2 years after they initially spiked up. So it was going in the right direction for a while. And then mid last summer, started to turn around a little bit, and not super clear why. We just got February's numbers. I don't know, Luke, did you hear
I did
about this?
see. I did. So it's back. We got a two handle on it. I think we got 3.0 or whatever last print, and the February number came in at 2.8%, which is where we just feeling a lot better, and it's going in the right direction.
Yeah, here
Mm.
we go. So yes, exactly like you were just saying. 2.8 is better than 3. And on a month over month basis, it looks even better. In general, this is the outcome I think everybody wants at this point. We're definitely still in an environment where everyone's worried about inflation getting too high rather than other parts of the world like China, where inflation has been too low for a few years now. We've got the opposite issue. Looks like we're going back in the right direction. I will say, though, that compared to that January number, 0.5%, there was a little bit of chatter that maybe the seasonal adjustment wasn't quite as appropriate as it should be, because we've seen outsized January numbers for the past couple of years now. So, maybe January was just a little bit overstated. And then at any rate, here's what the year over year looks like.
Mm.
Yeah, like you said, 3%. Now we're at 2.8, a little bit below where we were in December. The
Yeah.
core number decreased by about the same amount as well. So 3.3 to 3.1. Now that one's kind of interesting, though, because this one is now the lowest it's been, I believe, ever since inflation first spiked up. Recall that the difference between this burgundy line, this core inflation, and the underlying, the blue line, the headline inflation. The blue line's including everything, and then the core is removing what they call the more volatile components, and that means food and energy. This is important because on a political basis, politicians have to speak to the blue line because this is what people pay for day to day. From a monetary policy, how do we approach or try to fix structural inflation issues, inflation that's been structurally too high for too long? That's more in the Fed's domain. And so they're really looking at this burgundy line, whereas the Fed doesn't really have much control or really any control over things like energy prices and food prices. What they do have control over is aggregate demand in the economy. Roughly speaking, what the Fed does is they proxy that by their target interest rate. All else equal, the higher that target interest rate, the more expensive money is going to be, and the less encouragement people will have to invest their money because they could earn more on the higher Fed rate. So this is important right now because we're actually just ahead of the next Fed meeting, which is going to be next week. So we're sitting at March 13th right now. Next week, the Fed is wrapping up their March FOMC meeting, second of the year. So they do 8 meetings per year, but only every other meeting. So once a quarter, they release this thing called their Summary of Economic Projections. And so this is something that we wanted to talk about next week, but this is something that's really closely watched by people in the market and really anyone who's interested in what's happening with interest rates and inflation. So in the SEP, so they basically survey all of the members of the FOMC committee, and so they work with their economists in each of their districts within the Fed, and then they write down their expectations for a couple of key metrics: what they think GDP growth is going to be, inflation, what the CPI is going to be. They also write down what they think the PCE, the Personal Consumer Expenditure Index, is going to be as well. And there's a little bit of subtlety there, but for all intents and purposes, it's also an inflation read. So this is going to be the first one that they have released since December. So the first one since Trump has taken office, and most notably since the whole trade war has begun. So everyone's very concerned about inflation right now. So it's going to be really interesting to see what but the Fed's expecting. Previously, they've been pretty sanguine about this, that they can look through any tariff-induced inflation. And in fact, last year they kept saying over and over that they're not taking any tariff expectations into account, because at that point they were just that, expectations. Nothing had happened yet at that point. But this time, obviously, many things have happened. So now they're faced with a same question in a very different way. Given all of this erratic tariff headline behavior, what do we think inflation is going to be? Do we still think we're going to get back to 2% over the next year or so? Or do we think it's going to be stuck for a little while?
I don't know. I think, I heard once that favorable inflation data came out, the market just went on a tear, up 10%. No, wait. Oh, wait. No, that didn't happen, Joe. What's going on?
Right.
What's going on?
There's still a great deal of pessimism out there.
Yeah.
The market. So again, it's like whenever we're talking about the market, I think people typically mean like the stock market. And so these things are very short-term focused. They don't see too far into the future. They see angry Trump tweets about tariffs and people get very upset. So that's the state that we're in right now still.
Yeah.
Now, the argument from Trump's administration is that there's going to be short-term pain for long-term gain. They even acknowledge there's going to be short-term pain. So the next question is, how much pain?
Yeah. Yeah. How much pain, Joe?
A
lot of pain today. Social Security pain. That's going to be painful. Yeah.
Inflation pain, tariff pain. It's really got painful recently. What's going on?
Yeah. Well, if it, bleeds, it leads. Basically in the news business here, Joe.
So we had CPI this week, and then one day later we had PPI as well. So instead of consumer price index, this is producer prices index. So as the name would imply, this is not what everyday people are buying, but those that are producing goods, what they're paying for their inputs. So given that tariffs are in the news and people are upset about that, what do you think, Luke? Is this going to show a better or worse picture than what CPI shows? Assuming you didn't already see this one as well.
I did not. I'm not that plugged into these, but that is a good question. So what do I think it's going to, what have gone, is it going to be, I'm going to say worse.
I gotcha. It did the same thing.
Oh, okay. Nice.
And I memean, that's
good.
This is the first month that Trump's been in office, but these things operate with a lag.
Yeah.
So it's
absolutely
kind of same thing happening still. Now, next month and the month after, now that some tariffs have gone into place, particularly with China, and into April when the reciprocal tariff regime is set to go into place, then, we might be seeing a little more of a divergence here. And so that might actually, I don't know, maybe be kind of a good thing if we're seeing only PPI increase, but not CPI. All of that still remains to be seen.
I gotcha. Hey, by the way, my comment about us being in the news business, that was not a negative thing. I think that's good. I think we are. We're the new form of news.
You are the news now.
Yeah, we are the news. Yeah, we just show the primary data.
Otherwise, I've got a little Trump video where someone asks him, how much pain is there going to be?
Mr. President, on tariffs, you made clear you're not backing down from this, but many American small business owners say they are concerned that these tariffs are going to hurt them. What's your message to them?
They're going to be so much richer than they are right now. And we have many. Yesterday, General Motors was in. They want to invest $60 billion. The people from Facebook were in yesterday. They're going to invest $60 billion by the end of the year. Other people are talking about numbers. Apple, as you know, a few days ago announced $500 billion investment. They're going to build their plants in the United States, which, as you know, almost all of their plants are in China. Now they're building in the United States. Look, the reason is two things. Number one, the election, November 5th. And the other thing is tariffs. I think probably in that order. But Tim Cook came in and he announced 500, think of it, 500 billion, not million. 500 million's a lot when you think about it, right?
Sure.
Well, I would have been happy with 500 million, but it's $500 billion investment by Apple in the United States. And that's because of the election result, and it's because of the tariffs and the tax incentives too, tariffs and tax incentives. And I've never seen anything like it. We have plants going up now in Indiana. We have plants going up in Michigan. A lot of plants going to be planned from. I'm trying to steer them to Michigan because Michigan got so badly beaten by, what happened with Europe. If you look at Europe, take a look at the EU. We're not allowed to sell cars there. It's prohibitive because of their policies and also their non-monetary tariffs. They put obstacles in your way that you can do nothing about.
Digital service
But if you
taxes.
take a look at what happens, so we sell no cars to Europe. I mean, virtually no cars, and they sell millions of cars to us. They don't take our agriculture, we take their agriculture. It's like a one-way street with them.
Yeah, it was a pretty good sidestep.
Yeah, and that's kind of the point. So they asked him, what do you say to people that are concerned about inflation?
You're going to be richer. Yeah, I mean,
You're going to be richer. That's okay. Well,
you're going to be
how?
richer, and then he went on about the investments from companies.
Basically, just defending tariffs.
He didn't even really bother to. Well, yeah, I guess you're right. He did, but tangentially, I guess, defend him. Yeah,
He really has no answer to the question. Like, what do you say to them? I mean, I guess the answer is just hold on and wait it out. How well is that going to be received?
Yeah,
I guess we'll find out.
we will, and we'll be here to tell you about it.
We'll be all over it right after we talk about the Fed's summary of economic projections next week.
Woo! I got goosebumps. Just thinking
Get
about
excited.
that. I'm excited. Yeah. All right,
All
man.
right, well,
Yeah.
that's
Thanks
it.
for tuning in.
Another episode. We'll see you next time.
See you next time.